Guildhall banquet we had last night for the Commonwealth, for our strategic partners. So if you're not a strategic partner, you don't know what you're missing. It was a great event. The first time really we've put black tie on, or national costumes. We had lots of high commissioners there, and of course a lot of people from the city and greater UK. Great event, and really nice to be out sort of shaking hands with people, not wearing masks. Rather extraordinary, but good fun, and I hope those of you that came enjoyed it. This has been a terrific trade and investment summit so far, in that we've had over 1,000 people registered. We've had hits on various sites of 250,000 people. So there is great interest in what the Commonwealth is doing. It's alive and well, and it's alive and well because people who are joining this and participating, like we have here, it's the input that you make to it that makes it happen. We're talking today about fintech, as you know, and I had a quick look in the dictionary to find out what fintech actually meant, and it says integration of technology into offerings by financial service companies. So therefore, it is very impressive that we have Senator Ian Gorst. And by the way, I've just earlier today signed an MOU with the great state of Jersey, government of Jersey, for an enduring partnership with CWIC. So Ian, thank you so much for coming and doing that. And he's here with me in person, which is marvellous. And Wilf Blackburn, who doesn't really know where he lives because he's permanently on a plane, being responsible for the prudential growth markets, off, I believe, Wilf to Cairo, Casablanca. Home is in Hong Kong when you are allowed to get there, and so we're very pleased that you're here. Nana Bena, you're lovely to see you again. You're in Ghana by the look of things. We didn't see you last night, so you must be in Ghana. Of course, Universal Merchant Bank, partners of ours, lovely to see you. Michael Kent, well done, Michael. Nice to see you again, the great entrepreneur that you are. Alex Manson, good to see you. Thank you for joining us from Standard Charter. And Bharat Trivedi, the new, well, not quite new, Chief Executive Crown Agents Bank. Where are you at the moment? You probably can't respond, but when you get to us, let us know where you are when your time is to speak.
Very much here.
Where are you?
Very much here in London.
Oh, good to see you. Well done, and thank you very much indeed for joining us. I'm going to ask Ian to open in a second, but I think some of the things we want to cover really are clearly this terrible COVID pandemic, and how fintech has probably moved on at a far quicker pace than anyone ever thought it would do. Particularly, I'm from an insurance background. People say to me that insurance has moved on what should have moved in 1 year, what would have normally taken 10 years. So I want you to touch on that. I want you to touch on, of course, the very important thing of data security. I'd like you to touch on, when we get to it, things like cryptocurrency and the effect that's going to have. Blockchain, of course, which is key to all this. So, Senator, may I... it's so nice to see you in the flesh, by the way, because we're normally sort of doing Zoom. Senator, can I ask you to say a few words and let us know how it's going, obviously from a Jersey aspect, which is this huge financial centre, and from your perspective, the development of fintech.
Lord Marlon, thank you very much indeed for your very kind invitation, and it's a real pleasure for me to be here in person, as it was to attend the event last night, and the feeling of happiness to be back together again, facilitated by yourself. We're all grateful for. And it's a particular pleasure for me, of course, as well, to be part of what I know yesterday was a phenomenally successful day, and I hope that today will continue to be so as well. So Jersey, being an international finance centre, recognises that access to finance was challenging before COVID and before economies were closed down. And it's so much more so now, and therefore that creates, I think, an imperative, particularly from a policy maker's perspective, because it's easy for us to see all of the great things happening in technology and the benefits that that can create for traditional financial services companies. But we must always be mindful that actually there are millions of people today, post-COVID, struggling with access to finance, struggling with access to financial services. And that's not just individuals, that's small, medium-sized enterprises, as well in some cases on a more countrywide basis. And from a policy maker's perspective, which is what how we look at it in the government of Jersey, is what do we need to do to facilitate the advancement of technology and actually use it as a catalyst to deal with some of these old problems that haven't gone away, they've worsened. And I think for us the overarching issue is that from a government perspective, so that's when it's thinking about regulation, from a regulatory perspective, those who are developing fintech and technology, how they come together to overcome the barriers. Because the old way of approaching regulation that has served financial services and developed countries well in the past is not going to improve financial inclusion. So we are thinking about that on a national level, and it's how we come together to listen to each other and then respond accordingly in our particular field. But Jersey also, being a large financial centre for its size, and having a lot of Commonwealth brand institutions in Jersey, is very mindful in its international aid budget that actually it can also harness financial services expertise and professionalism in supporting micro financing and mobile banking units and things like that around the developing world as well. So it's about coordination, it's about looking to see how we can use technology to limit the detrimental or stumbling block effect of regulation, because access to finance is a fundamental to people across the globe, and some would argue, and I think I do, it should be a fundamental human right.
Well, I think your statement of stumbling block of regulation probably resonates with everybody on this panel. It is the, should we call it, the elephant in the room, and we'll do more of that later, Ian. So thank you very much. Now, Wilf Blackburn, I could touch you as well. It's amazing, and we're not wearing masks. Fantastic. Wilf, so good of you to call into this country briefly, and you know, you're covering, I don't know how many countries now, at least 20, I think, just permanently on a plane. And of course, there's been a demerger announced last night, I think, yes, of Prudential. Just touch on that briefly before you get into your spiel, if you wouldn't mind.
Yeah, thanks. Well, good morning, everyone. It's a great pleasure to be participating today in this panel on fintech and financial inclusion. Lord Marland, yep, first a little about the demerger announced yesterday. Well, Prudential, following the demerger of Jackson, our US business yesterday, and 2 years following the demerger of the UK business, that means that Prudential is now fully focused on the growth markets of Asia and Africa, which is really very timely from the perspective of this conference. In fact, you know, as a business that's been born in the UK and with deep roots in both Asia and Africa, Prudential, this new post-emerger Prudential, is very committed to driving the economic growth throughout the Commonwealth. And that the Commonwealth is a group in which Prudential participates in 9 of the member countries. That's 3 in Asia and 6 in Africa. In Asia, Prudential has a presence in 15 markets today, and that includes Malaysia and Singapore, which are 2 of the oldest and the largest insurance markets. In Africa, we've been building our business over the past 7 years, and we now have a presence in 8 markets. That includes Kenya, Uganda, Zambia, Nigeria, Ghana, and the Cameroon. Across these 2 continents, Prudential has the privilege to serve 17 million customers today. But there are millions, if not tens of millions more customers that we could be serving in the future, because in both of these continents, the vast majority of the people are underinsured or not insured at all. For example, in Asia, 8 out of 10 people still have no insurance cover at all. And then in Africa, where the population's forecast to be doubling to more than 2 billion by 2050, still in a situation where fewer than 50% of the population have access to modern healthcare facilities. And these protection and health gaps, they're only going to widen going forward, despite the increasing affluence, and that's because people are living much, much longer. To illustrate this, over the past few decades, we've seen double-digit increases in life expectancy in many, many Asian and African markets. And now, for the first time in history, the number of people aged 65 and above actually exceeds the number of children in the world aged 5 years and below. So people are going to be needing more to help them to save for their retirement years. And also with the increasing lifespans, of course, there's going to be social pressure because of the cost of healthcare. And that's the reason why Prudential's hoping to be able to increase the number of people we serve to 50 million by 2025. But in order to increase this capacity to serve more people, investments in technology are absolutely key. For this reason, Prudential's been significantly increasing our investments in digitization in recent years so that we can reach and support more people. Key to this investment has been the capability and the capacity we've been building with our health and wellness ecosystem, and that's called Pulse by Prudential. Since launching Pulse in 2019 in Malaysia, we've now achieved around 30 million downloads of this app across the 17 markets in Asia and Africa where we've launched Pulse so far. Just to conclude the opening remarks, if I may, it's our view is that in order to get greater levels of financial inclusion, most important of all is even greater level of collaboration and partnership between the public sector, the private sector, and academia. It's with this in mind, for example, that Prudential's been supporting the Singapore Fintech Festival led by the MAS in Singapore since 2017. And together with the Insurance Regulatory Authority in Ghana, we've been supporting investment in fintech startups and through the BEMA Lab Accelerator Program. In fact, only last month, Prudential signed up as one of the anchor clients of the Nairobi International Financial Center. And so these initiatives demonstrate Prudential's absolute commitment to fostering throughout all of these countries a culture, one of collaboration and also innovation. And we do believe that by collaborating even more together, we're able to help more people in the Commonwealth to get the most out of life. Thanks again for the invitation.
Thanks, Will, very much. And I'm glad you mentioned Ghana because that's a nice segue into our next speaker, Nana Duemo Bene, who is recently appointed, well, February, wasn't it, Nana, that you got into the hot seat. We haven't met physically, but I was in Ghana just before you took the hot seat. Delighted to see you. Of course, Nana, one of the things that you're using is mobile technology, isn't it? in a big way. But I won't shoot your fox. So over to you for a few minutes.
Thank you very much, Lord Marland, and good morning to everybody else. I must say I'm extremely delighted to join this, which is my inaugural attendance to this summit, which is also organized by the Commonwealth Enterprise and Investment Council, not least because of the eminent co-panelists I have the privilege to be part of. So thank you very much. I think this is also a very relevant and topical issue for us here. For Universal Merchant Bank, which I'm proud to be associated with, a mid-sized bank in Ghana, which has been operating for the last 49 years. And therefore, we have witnessed the evolution of business and support for entrepreneurship go through its various phases, hitherto characterized by traditional methods, which was heavily dependent on multiple physical engagements and research, now to an environment fueled by things like big data and algorithms that enable business partners to sort of gain in-depth knowledge of each other's companies in literally minutes. Now, as you can imagine, that presents a lot of good opportunities for us, especially to sort of compete with the big boys, because technology, if you like, has become a bit more of a leveler. At the moment, we're experiencing a democratization of technology, which has significantly lowered the barriers of entry for investment for companies like myself, through things like open source systems, which are now readily available for people to build upon. This obviously, coupled with our extremely young and technology-interested population, is a massive boost for countries like Ghana and companies like myself, because as you also know, Ghana is very heavily import dependent and therefore does a lot of activities across its borders. Also, given the circumstances of times which we are just emerging from, what we have witnessed is a significant shift in user behavior, more towards technological solutions. And so at first we had to be persuading our consumers to switch, but as a result of the experience of the world, we now have consumers much more interested in using it. So all this gives us a great opportunity. And we believe that we are on the cusp of taking advantage of these opportunities to leverage better for the businesses that we are privileged to manage. And of course, all these things for us is very pertinent to the Commonwealth Council and aligns very much to the ethos of collaborating among ourselves for the interest of businesses. We now are in an environment where we have collaboration without borders, where through technology, we can have small businesses in Ghana collaborate with various other businesses across the Commonwealth and across various countries by the use of technology. In the past, there were a few big countries who were, if you like, the ones used to doing business directly with the businesses in Ghana. Now, as a result of technology, we can collaborate with various other companies and be able to deal with them as well. And so we have a lot of opportunities to partner, to bring technical expertise to our clients. We have opportunities where we can showcase the clients, but more importantly, we now are in a position to allow people from across the border to actually understand each other's business, understand where they can find each other, and actually be able to identify customers and know that they will be able to get to the information without much of a hassle. This gives us opportunities in things like crowdfunding, where now we can do crowdfunding across borders because people can sort of get together and share details of each other's businesses, and also offers tremendous opportunities in supply chain management, both for the imports we receive in the country and also for our emerging exports business, where more and more companies are more interested in ethical, if you like, imports entering their countries. And now through technology, we can trace it right down to the farmer or to the producer and ensure that it aligns with the sustainable policies of each other across the world. So we live in very interesting times, I dare say, and I look forward to collaborating even more with fellow members on this council to take advantage of the opportunities that we are being given now. Thank you very much.
Thank you very much. I mean, your point about crowdfunding is very interesting. I wonder how that how it marries itself with knowing your client, which is a great thing for banks these days. It's and getting to the bottom of that. Anyway, more of that later. Thanks very much indeed. Michael Kent, you're with us, the great entrepreneur in this space. Azimo is, of course, a platform that helps payments or facilitates payments at greater speed, and of course, in theory, dramatically reduces the costs. Michael, love to hear your perspective.
Thank you very much. I'm exceptionally honoured to be included in this esteemed panel of people who've got a lot of success under their belts. I feel like I'm still just scratching the surface. But I'm the founder and chairman of a business called Azimo. It's a cross-border payments platform. We're very focused on the remittance market. So we offer a digital alternative to maybe a traditional money transfer flow like a Western Union or a MoneyGram. And so, very active in the Commonwealth. We obviously send our largest send market is the UK, although we send from 27 other countries, have pretty large presence in Australia and Canada on the send side. And then we send actually a couple of $1 billion a year in very small chunks, so $200 to $300 to lots of Commonwealth countries. So Nigeria is a big market for us, Ghana is a big market for us, Kenya, South Africa, but also other markets, so Latin America, the Philippines, India, all very big markets for us. So what we're really trying to do is offer people an alternative to a expensive and slow traditional money transfer. So 75% of our transactions land within an hour. 60% of those transactions are instant. So we move the money very fast. 95% of our customers are using a mobile app to send the money. And then on the receive side, we offer a variety of ways of dispersing funds. So we traditionally, a lot of this industry has been cash disbursement from banks and financial institutions. These days, we're sending a lot more money into bank accounts and a lot more money into mobile wallets, which I think is an interesting trend. I guess just a few thoughts on what's happened since the pandemic. There's been an explosion in consumer demand for technology-enabled financial services. I think that's across the board, actually. But particularly, we've seen a boom in the number of new customers coming through. Really, I guess it was a forcing mechanism for people who've really been sending money home in one way, had to find an alternative as lockdown sort of rolled out across the US and Europe. People were looking for a different way. So and that wasn't just us. You see consumer adoption of digital apps. We spend a lot of time with financial institutions in the countries that we send to, and they said we're seeing exactly the same thing. And actually, the shift of Azimo's transactions going into people's bank accounts and people's mobile wallets was significantly higher today than it was 18 months ago. So, which I think is great news, because anything you can do to get people receiving money faster and more easily to a bank account or a mobile wallet generally does two things. It means that they're more in control of their funds, they have better security, and also the cost is radically cheaper. And you alluded to this in the introduction, but we're aiming to get the cost of sending money well below the United Nations goal of 3%. Our take rate tends to sit at about 1.5%. That's against a global average for a money transfer of about 7 to 8%. So technology like and fintech, I guess this is the big promise of fintech, is able to radically reduce the cost to serve customers, and therefore radically reduce the cost to those customers of using a financial service, which is super exciting. Just a few reflections on what's going on in the market. Obviously, seen a surge in the capital markets, a huge amount of money pouring into technology stocks, all the way from the public markets to the private markets. And you're starting to see some interesting, particularly in Africa, fintech businesses getting a lot of money from global investors, people like Chippercash, obviously InterSwitch in Nigeria, Wave, Flutterwave. You're seeing a way, and I'm not a big fan of the term, but these fintech unicorns, businesses privately valued at over $1 billion, are coming through. And they're not just in the US or Europe anymore, they're in a lot of Commonwealth countries as well. So I think that wave of cash coming into the industry is great because it spurs innovation. Interesting things happen. You've got a lot of consolidation happening. So companies are buying each other in fintech, which I think is an interesting trend. We're starting to experiment with stablecoins and crypto. I know that's on the agenda for later on, and we can talk about that. But that really starts to be mainstream at this point. And then I think the other, and Alex can probably speak to this as well. I was interested to hear all the things that the Prudential are doing in the market, and of course Merchant Bank. I think it's really interesting how traditional financial institutions are starting to work with fintech. And it felt like, I set up Asimo 10 years ago, it felt in the early days, it was very hard to get any kind of attention or dialogue going with a large financial institution. And after that, I think they were a bit dismissive of fintech, flash in the pan. I think probably, and this is not directed at anyone on this call, but it felt like the industry was not ready to be receptive to new ways of doing things and new ideas. I think that's completely changed. And the great opportunity that we have is for the fintechs to start working ever more closely with the banks who have distribution, who have networks, and fintechs that have new technology and new ways of doing things. So I think that's all interesting. I'll just focus just at the last sort of 30 seconds on challenges. Obviously, we all need technology talent. So I think there's a big challenge for getting enough great technologists, be they software developers, be they product managers, into our businesses. I think there's a job for everyone, both government and private sector, to do there. On talent, regulation remains a challenge, particularly in certain markets. Stuff has happened in Nigeria in particular, which has been a big challenge over the last 12 to 18 months. And so that we just need a way of having a meaningful dialogue with regulators. And I think identity is always an issue. And we talked a little bit about KYC and regulation. I think there's a lot to be done to solve that, because that's probably one of the things when we think about financial inclusion and getting more people financially included all over the world. I think identity and KYC are probably the one thing that holds that back. So, lots to be done there, but I'm incredibly hopeful. And what a time to be alive, and what a time to be in fintech.
Yeah, wonderful, Michael. Thank you very much indeed. I think it'll be interesting to see how this application works through credit cards and things like that, how the transfer of money for the ordinary retailer, the way that we're used to paying for things overseas in particular through credit cards, and where that's all going to end up. We'll come back to that later. Bhairav Trivedi, obviously you're running a international bank. Crown Agent's got this Rolls-Royce reputation of acting in, reaching parts that other banks can't reach, should we say. Over to you for a couple of minutes.
Morning, Lord Marland, and thank you so much to you, and kudos to you and the organizing committee of CWEIC for pulling out such an amazing event. So yes, I thought what I'd do today is just give you a quick rundown about Crown Agents Bank. I don't believe we are as well known in the region as we should be, given what we do. And to that extent, I thought I'd tell you basically what we do and who our customers are, and then potentially talk about some of the impacts of what we do. Almost all the panelists on this panel use us in some way or the other for any of their transactions, right from Asimo to UMB, all the way down to Standard Chartered. What we do is effectively, we are the backbone of global funds movement. So think about, you've got the Asimos on the front end, you maybe have the UMBs on the back end paying out these funds, but someone in between is to take those funds, move them across borders, execute a foreign exchange transaction, and then deliver them to the delivery agent. And that's really what we do. So we leverage technology to provide best-in-class FX and payment solutions across emerging and frontier markets. So who are some of our customers? As we've said, our customers broadly split out into 4 groups. We've got banks, and these could be banks in the emerging and frontier markets, as well as established markets. We've got the large international development organizations. So think about anything from Save the Children all the way to major UN organizations globally that basically provide aid, sustain, funds, movements, etc. And we manage all of that for them, right from the start off all the way down to delivery of the funds across different geographies. Then we've got, of course, the non-bank financial institutions, much like the Asimos of the world and some of the other competitors of theirs. But those are people that are enabling remittances, and these are core funds that are moving back to sustain not just friends and family back home, but even at some point, to sustain businesses, grow businesses. So as we talk about SMEs, these could be people that finally facilitate that. And then our last group of customers is the governments. So think about first world governments from the US, the UK, etc., all the way down to central banks across these emerging and frontier markets. And all of these are customers. We enable them to actually move funds globally to make payments wherever they need to. How do we do this? So our technology basically picks up, and executes a foreign exchange transaction, and then we're able to deliver those funds straight out to wallets. And we do that in a multitude of ways. We are able to actually give proof of life. We are able to identify individuals. So when we're sending money to Joe, we know that Joe is Joe and not someone else coming up as Joe. And then finally, I think, one of the things that I want to mention, and we talk about, the fintech, so I won't talk anything about that here, but I think we have a huge social impact in what we do in the region. You think about development flows, oftentimes these are funds that are getting to people, and traditionally the way they've gone with a multitude of people in between, you've got tremendous leakage in the system. And what we do is eliminate all of that leakage and deliver the funds directly to the beneficiaries. So these could be aid flows, these could be humanitarian flows, these could be flows to sustain friends and family, as we mentioned earlier, and even SME business payments. So the small entrepreneur, why should he get the short end of the stick when he's actually trying to get money from somewhere? And we manage all of that. So that's CAB in a nutshell. I've been in the job for a few months now, and my background has all been fintech and leveraging technology. And so I'm really excited to be in this panel and hope to be able to contribute to that. Thank you.
Thanks, Bara, very much. And welcome to the job. I mean, we've talked before, but very interesting time for you. Alex Manson, Standard Chartered Ventures. I mean, you strike me as being a bit of a poacher turned gamekeeper in a sense. You've been a banker and now you're an entrepreneur. And look at you, you're not even wearing a tie. If people at Standard Chartered could see you now, they'd be horrified because they're so... Anyway, no, I'm so glad you feel relaxed enough to come on this show. Alex, over to you for a few minutes and welcome. Fascinating to see your take on this.
No, thank you so much, and it's a privilege to be here and such a great panel as well. So humbled and coming last. Maybe a quick words on Standard Chartered. You're right. I've been a banker all my life. I've been wearing a tie most of the time. It's now SC Ventures logo, which is a little different. But I still write banker when I go through immigration, which is a little rare these days. But this has something to do with banking. A few words on Standard Chartered and then SC Ventures, which is less well known. I just say, Standard Chartered Bank has been in existence for 170 plus years. It's obviously headquartered in London, it's in UK, but the vast majority of our business for all this time has been in Asia, Africa, and the Middle East, with plenty of Commonwealth countries in it. And for years, we have connected the flows, and we have been present in these markets, and at times for a really long time have never left, throughout the history, and lots of ups and downs, and intend to be there for a long time. So it's a bank, the DNA of which is very much linked to the Commonwealth, and obviously we're playing that role in all the markets we operate, and very proudly so. SC Ventures is less well known. It's a unit we set up a little over 3 years ago. I was running the transaction bank for Standard Chartered at the time, and experiencing a lot of technological change, but also the conviction we acquired was that on the back of remediation and following a decade after the financial crisis and various types of remediation, including financial crime compliance. The bank had a sound basis, but it was really important to reconnect banking with the societies where it operates. And meaning that the sound basis is a necessary, non-negotiable condition, but not sufficient. And reconnecting banking and society implies serving customers the way they need to be served, which has evolved in that period of time. But also bearing in mind that technology has enabled things today which weren't possible only 5 years ago and certainly not 10 years ago. And so we set out to really rewire the DNA in banking, as we call it, transform banking, including arguably not limited to our own bank, and doing this both inside and outside the bank. Inside the bank, we've engaged extensively in partnerships with lots of startups. So you were quite right earlier, Michael, to mention the bank skepticism. We've been really open arms and in fact have done hundreds of POCs and implemented technology capabilities that we thought we had to have within the bank. And we have an investment effort. We actually invest in our partners. In fact, we only invest in our partners as part of that transformation. And these partnerships have typically gone from strength to strength. What we are also doing, and this is absolutely critical to the transformation point, is we're exploring new business models, and that typically cannot be done within the existing corporate because the business model by definition is different. And so we set out to create ventures outside the bank, which are backed by us initially, but are independent companies. And over the last 3+ years, we have incubated some 30 startups, including some that have now launched and are growing nicely. So, and I'll rattle through a few examples. Obviously, we've built and launched a digital bank in Hong Kong. Just announced a second one in Singapore. We have a payments business, which is really an aggregation of payment, including cards and everything else, specifically focused on the online economy, which was growing before the pandemic, but that has given it a very different dimension now. We've built a banking as a service business where we're plugging the bank into someone else's e-consumer platform. So this is really a financial inclusion play. In the sense that this is a way to provide bank-in-the-box banking to a number of consumers, and this will launch shortly in Indonesia. We have launched and are scaling now a platform serving SMEs in India. At this point, in a short period of time, a little over 70,000 SMEs doing e-commerce, and the idea is to help them grow, not necessarily just provide financial services, but help them grow. And that includes supply chain financing, obviously, our services, but not to the exclusion of others, as well as insurance, as well as bank account reconciliation. Generally speaking, creating that trust score, that trust among SMEs, which enables them to trade and grow better. It's a proposition which we launch shortly in 2 countries of Africa, including Ghana. Actually, we should love to have a conversation here. We have a health, wealth, lifestyle, retirement business, which is being tested now in Singapore and also launched, also scaling and obviously roll out in other markets, etc. So in other words, a number of startups, business models. Think of ourselves as a startup building startups, and marrying the core competencies of the bank, which is operating in a hyper-regulated environment, knowing what it means to do KYC, knowing what it means to comply with rules and regulations and so forth, but also being very different in the approach to serving clients. Maybe the last point I'll make is a common. There's probably 2 common threads to all this. One is the Commonwealth. One is the markets where we have launched those organizations and where we think we have a role to play because of our long-standing presence. The second common thread is some of the themes which I think I want to discuss. SMEs are critical to growth. They've been not treated very well by the banking system, and there's more to do there. Digital assets are here to stay. Online economy, etc. Sustainability. So those themes have become investment themes in many ways.
On the subject of SMEs, this is a very important point, which I'm now going to. As you're still on, I'm going to ask you briefly to respond to it, and then I'm going around the team. I mean, if I'm an SME, it's very, very difficult to open a bank account. And actually, as an individual, it now takes a long time to open a bank account. As an SME, I can probably start my business, get the legal contracts done within 3 or 4 days, but opening the bank account, if I go to the bank, it takes a very long time. It strikes me, and I'm talking to the panel across the piece here, but it strikes me there are 2 levels happening here. One is the old level where it takes me ages to open a bank account, the paperwork I've got to go through, KYC, as you've all alluded to and I alluded to earlier, and all those regulatory issues. And I mean, as a publicly exposed person, I mean, even my children find it impossible to get a bank account. I see volunteers saying on the panel saying, "Don't worry, we'll look after them." But and then at the other level, you've got crowdfunding, as Nana says, happening like that. You've got cryptocurrency sort of driving the whole thing away. You've got mobile apps. You've got this sort of huge, great wild west of technology driving through change, which is impossible to manage compared to the ways that you were trying to manage things. And of course, within that, you've got the abuse, which is hacking and access to other people's data information. So this is a big question, but it is the question of how all this is going to happen. So I want everyone on the panel to talk. And Ian, as a policy maker, I'm going to end up with you. So it gives you plenty of time to think of the answer. But Alex, just pick up on that for me, and then we'll run around the panel pretty quickly. We've not got too much time, so see what you can make of it.
So your question has embedded lots of really important themes, including cybersecurity and data regulations, including compliance, and including the fact that it's really hard for SMEs to be financially included. In other words, open a bank account and do business. The good news is technology enables things today that again weren't necessarily possible earlier. So just by virtue, and I was describing Solve, which is the e-commerce platform in India earlier, just by virtue of having a number of SMEs do business on it, just the information we derive from flows allows us to create a trust score. That trust score is not a credit score; it gets pretty close, but it's a trust score. It tells me a lot about this SME, and that enables onboarding at a speed and with means that are a lot more current and forward-looking, as opposed to what banks typically would do, which is backward-looking financial statements, which, by the way, people may or may not have. And so the idea is really to apply modern technology and do this in a way that allows us to onboard and serve lots of SMEs efficiently in the way they need to be served. That is very precisely what I think finance needs to do, and difficult for banks with established processes to do it within the bank. But the idea we're pursuing is obviously to establish those business models that are a little different, open architecture, very different technology stack. Which will serve SMEs the way banks historically have not been able to do this. I would add that to your point about cybersecurity, there's a number of important conditions for this, and one of them is to do it well. So unacceptable to acquire a lot of data and use it to onboard people, but then lose it or allow it to be hacked. So there's an element of doing this the right way and having in place the sort of institutional standards that policymakers and society in general have come to expect from banks. And so in that sense, it's not just a fintech startup. It's a fintech startup with a certain level standard of operating procedures, which we hope will provide for that. So an element of doing this the right way, but it can be done, and it's a huge opportunity.
Thanks. Very interesting. Nana, how are you coping with all this?
Thanks, Lord Malin. I think that we're seeing at the moment that obviously these things are based on trust. And in the past, we used to have stokvels like Susu in Ghana, which were sort of small societies where they knew each other very well, and therefore they could sort of trust each other and to be able to do it. Fast forward, technology is allowing us to do it on a larger scale in terms of onboarding and account opening. So for an example, in Ghana, because mobile phone telephony has been so prevalent here, with also mobile money, which became, if you like, the alternative to cash. So even though we're still predominantly cash, mobile money is quite an effective alternative to cash. What that has done is that through technology, you actually can trace and track an individual's transactions, an individual's activities, which enables you to build a profile with that individual. We have fintechs who are very much focused in using telephony activity and then sort of adding social media activity to build profiles of such individuals. And then technology like facial recognition, fingerprinting is also sort of put together to enable you now quickly to identify the client and then be able to go through the usual KYCs using alternative means to be able to sort of do that as well. And finally, regulation in our country is catching up. What the government is now trying to do is to form a Ghana card identity using the mobile telephony data, using data like health and pensions, and putting all that data together onto one individual profile such that you can go online, pick up that profile, and then use it for your onboarding, use it for your KYC to be able to sort of do that. So we're seeing all these interesting things coming out of the technology. And the good thing is that the fintechs, even the young fintechs, are taking advantage of these as well. We have apps now that go into the marketplace in Ghana and be able to do stock monitoring for even the smallest SMEs. And at a click of the button, you should be able to see the cash flow trends for that SME and how their trade is also going as well. So that's why these times offer us the best opportunity yet to be able to cross some of these obstacles and hurdles we used to have.
So it's really moved on apace, isn't it? I'm going to ask Michael now, and then I'm going to get to Bhairav in a minute. Michael, I mean, you're responsible for a lot of this. I mean, how can you ensure security and
I mean, it's tough, isn't it? Because you know, you stop people walking into a branch, and that identity piece becomes difficult. And ultimately, you know, because of the regulations being written over the last 20 years, really, we're always looking for whose money is it, and what was the source of those funds, and is it, are you trying to keep the bad actors and the bad money out of the system whilst facilitating the flow of good money, as it were. So, you know, definitely it's a challenge. You know, essentially we take that it's about trust, but it's also about verification. So, you know, that old adage that we probably haven't heard since the 80s is an important one. I think first off, SME customers are phenomenal. You know, it's not our focus at Asimo, but I'm sort of a pretty active investor, and SME customers are really good customers. They tend to have a higher propensity to pay for banking services. They tend to borrow more money. They tend to send more money. They tend to be higher value customers. So that's great. They tend to be harder to KYC because you have to not only look at the business itself, but you have to look at who actually owns the business, and you have to sort of two layers of identity verification and KYC. So that is what makes it difficult. If you look at the UK, where, you know, obviously Asimo is based, you now have businesses that will open a bank account for an SME in 5 to 10 minutes. You know, this is not insurmountable, and there are different regulatory requirements that will either speed that up or slow that down. But the FCA has a job to do to actually go out and talk to other Commonwealth regulators and say, you know, this is how we approach it in the UK, and it seems to be working. You know, it shouldn't be that difficult to open a business bank account. And then once people have open business bank accounts, you can do all that good stuff. You know, you can do the lending piece, you can do the collateralization piece, you can do the payments piece. And I think everyone in Europe, you've probably seen, even in the last 12 months, at least $1 billion of VC money going to people who are trying to build, this is a very trendy term, but the sort of fintech operating system for the SME segment. You know, where if an SME, all they want to do is get paid, pay people, and then occasionally borrow money when they need to. So that's basically their core needs are pretty well understood and pretty unmet. And I think there's lots of different people coming at it from different angles. You've got the accountancy platforms, you've got the banks, you've got the sort of pure play fintech. So it's going to be an interesting space. But my prediction is it'll be solved. You know, you're going to see some of the big global investment firms put hundreds of millions of dollars into fintechs in Africa, LATAM, and Asia, and we're going to solve this. And each country will probably have an SME specialist bank in the next 5 to 10 years. I'm very hopeful on that.
Great, thanks, Michael. And that leads us nicely on to Bear. I mean, what are you doing to make it easier for your SME clients in this technological revolution?
Absolutely, and thanks for that, Rodman. I think I want to bring about a couple of points out here. I think the first point is that we're noticing that more and more SMEs, when they're not able to get banking services from traditional banks, are migrating across to new, what you call your neobanks, etc. And the neobanks only came about because you had the mobile operators on one side that were providing mobile wallets, and people were suddenly starting to use this as a bank itself, right? You think about the fact that you can accept payments, you can make payments across a single platform, and suddenly, now in places like Ghana, actually, the mobile companies are even allowed to pay a small amount of interest to people if they hold a balance on the mobile phone. So now, do you really need to go into a bank, or can you manage all of that through a mobile phone? So that's, and that's really where the neobanks came in and suddenly said, we're going to make it a lot easier for the SMEs to get bank accounts because, this is a critical need that they have. I also completely agree with Senator Ghost to say that, financial services should be a basic human right. And just because someone doesn't have a document to prove who they are, does that mean they should be denied, right? I mean, we talk about KYC, and so you've got to make it easier. I mean, there's people in little villages all over and across, sub-Saharan Africa, across India, etc., that probably do not qualify for KYC because they may not have the right document in place. So you've got national IDs that are coming out. We are finding more and more people are using proof of life mechanisms. So basically having someone take a picture of themselves, blink 5 times, so I can say that's a real person. We also have ability to determine if a fingerprint is of a live finger or not, because what it does is a vein scan as well as make sure there are live blood vessels behind that. So technology is really taken this to the next level, and it's fascinating what's going to happen. I'm really excited about what's going to come out in the next couple of years on this piece.
Thanks very much, Barry. Very, very interesting. Wilf, obviously you're not a banker, you're an insurance man, but therefore the whole data protection issue, which I've alluded to, and how do you protect that data? What have you put in place as an organisation to stop people being hacked and all the rest of it?
Thanks. Yeah, I mean, insurance companies do hold massive amounts of client data, including very sensitive data, such as data on health. So for us, it's absolutely critical that we take good care in protecting the data of our customers. So we've been investing significantly in recent years in improving our data protection capability, and of course now we're also working with so many partners. We're working with around 50 partners in our ecosystem. So it's not just about making sure that we stay safe, but that we have very stringent methods that are in place to ensure that all of our partners.
How many attempted hacks would you have in a year?
Oh, I don't know, but there's
multiple.
Oh, it's in a day, and
in a day, really.
Yeah. So every year, for example, all 17,000 of our employees are subject to not just training and assessment in how to deal with it, but we run simulations and to test that people are responding and becoming ever more vigilant. We've got the traditional antivirus protection that we use, but also anomaly detection, AI-based software as well that we're using. It's but it's really an ongoing intensive effort, and really the weak link in the chain is indeed the people. Errors can happen, and hence the intensive investment on an ongoing basis in training our people. That risk became even higher in the COVID world, as many of our people were working out of the office for the first time, working from home, dealing with customer data at home, and so we've had to step up even further to make sure we got the right technology to do everything we can to protect the data of customers. This becomes an even bigger issue as as data is flowing more across borders. So we come to talking to the regulators. We love to see more common standards in terms of regulation for how data should be managed as we go across borders, because this definitely data flow across borders does help local economies as well as the global economy. So we look forward to more in the way of common standards there.
Great, thank you very much. Now, Senator,
all
eyes are on you.
You
started by it's a human right and the stumbling block of the regulator. Jersey, this huge financial centre. You have lots of international people coming to Jersey. Some perhaps you don't want to come to Jersey and don't pass your KYC tests. Obviously, obviously those that do have passed the KYC test. But
so we often, and the media pick up on, we've mentioned it, the unicorns across Africa in particular, where they're growing in phenomenal number. But we all know that actually our economies are powered by SMEs, and they are the driving force of all of our economies, and therefore this access to finance, which has been a struggle for them, it's critically important that we answer that, because I think from that will also flow better financial inclusion. The reality is every contributor this morning has given part of the answer. And this is why you should take credit, Lord Marland, for the work that you are doing in the Commonwealth Enterprise and Investment Council, because it's events like this where we can share experience, we can understand the exciting technology advancements in Ghana, and giving individuals a profile history of transactions, which will ultimately lead to a more trusted relationship that can allow them then into the financial system. Michael, I think, mentioned the old 80s adage of trust and verify, and it really is the basis of how we should approach this. There should be a great element of trust, but then you ultimately have to verify. Where does that verification always funnel back to? It always funnels back to regulators and policymakers, and we know the pressure on regulators to ensure that only good actors are using or providing finance in any particular economy is greater probably than it's ever been, and we all know why that is. But regulators have got to, with the support of policymakers, because they can't do it in a vacuum, they've got to listen, they've got to see what's happening elsewhere and learn from what's happening elsewhere, because let's be honest, if an SME can open now a bank account in 10 minutes in the United Kingdom, that is a learning point for all of us right across the Commonwealth to have conversations with our regulators to remove this bureaucracy and these roadblocks. And technology is at the heart of helping us do this. And I think we also heard about again in Ghana, the idea of a national approach to KYC. That's something that we've been exploring in Jersey. It's hard work, let's be honest, because you've got the risk profile of the institution who wants to tick all of the boxes. You've got the risk profile of the regulator, and we've got to bring them together and allow technology to be a really important part of that answer, reducing cost, reducing bureaucracy, but also making sure that there are appropriate verification processes in place. So I'm not sure if we're coming to the end, but I really do think that this conversation has shown the value of the Commonwealth Enterprise and Investment Council, because we can learn together.
You're on a commission, I think. I'll give you 10% of every new member. Thank you very much indeed for that lovely plug. Look, I just want to finish this because we started a minute late, and I want a quick fire, one-word answer from each of you. When do you think we will hit a cashless society? Michael?
Never.
Nana?
Unlikely.
Right. Bhairav?
Never. I have to agree with Michael.
Right.
Never.
Alex?
Same. Same.
Never.
Cash still part of life. Yeah.
Wilf?
To our dismay, by the way. But.
Yeah.
I think some societies will become cashless within this decade.
That's good stuff.
I don't know about you, Lord Marlon, but my private office, my friends and family say I'm already there.
That's a life in politics for you, public service. But with that, it's a very good time to end and to thank you all. I mean, absolutely fascinating. And I mean, I don't really need to say anything more than what Ian said, that hopefully that's what our organisation is here to do, is to make these fascinating conversations and attract such luminaries as we've attracted today, and with such a broad spread of views. So thank you all very much wherever you are. Thank you very much all of you who've attended. I know you'll have benefited from this great panel, and look forward to seeing you very soon. Our next one's on what is it on? It's on the new challenges of the workplace. Well, that's going to be fun. Thanks very much, and thanks, panel. Great to see you.
Thank you.
See you
Thanks
too.
very much. Cheers.
Thanks, guys, very much. We're off, are we? Yeah.
Thank you.
We're clear. Thanks, guys.
Thank you. Thank you very much.